How are we getting on, guys? Luke here from LAGFX. We're back today with a new Sunday Sessions video. In today's video, we actually have a very special guest. Tom from Simply Forex has come to join us today in providing you guys with some top quality analysis. This analysis can be used to give you guys further confluence, add to the analysis you've already performed, and help you make those trading decisions that you may be unsure about. Now, on top of all of that, it gives you guys the opportunity to see exactly how both me and Tom trade and how we look to tackle the markets on a week-to-week basis. If you do go on to enjoy his analysis today, go ahead and subscribe to Simply Forex. I will leave all the links in the description. Tom also has a free Discord channel where he provides plenty of content in there as well. So what I'm going to do now is pass you over to Tom. He's going to go over some of the analysis that he has performed this weekend, giving you a good rundown on how he's looking to tackle these markets. And from there, he'll pass it back over to myself and I'll provide you all with my usual Sunday Sessions video.
Hello traders, how are we? Hope you're well. Tom here from Simply Forex. I've been asked to share a couple of charts, so here I am to show you a couple of trades that I'm looking at. And if you enjoy my analysis, guys, then please come join my channel, Simply Forex. We're going to start with pound New Zealand dollar, and we're looking to sell this. And you noticed on Friday that the New Zealand, the Kiwi, just got crazy strength. And that was because the Royal Bank of New Zealand said that they would increase interest rates, whereas all other central banks have been keeping interest rates the same. So that's what led to that New Zealand dollar strength. And those of you who may or may not know me, I do a top-down approach, guys. So I tend to start with the weekly and the daily to give me my direction. And then I look at the H4 and H1 for entries, all right? So that's what we're going to do. Let's start with pound New Zealand dollar then, and we're looking to sell this. So this is the weekly chart, all right? And first of all, I want to look at structure. So structurally, this for me is still in a downtrend. This is where we are currently. Yeah, we still have lower lows, and these highs haven't been broken. So we're still in a downtrend, all right? And at this resistance level, yeah, we've had a very nice bearish weekly candle. Okay, so on the weekly chart, we'll just be looking to take it back down to this blue line. This is my target here, because this is the next piece of potential weekly support here. And that's always my target, because support means buyers. Yeah, so I don't want to sell into buyers. All right, so weekly chart makes sense. Structures with us, bounced off a resistance level, nice big bearish candle. We're looking for sells. Now let's drop down to the day chart and see if that supports our idea. And it does, yeah. You can see price come up here, hit that weekly resistance level. And then if we just follow structure, yeah, it is breaking down. Clearly, we're getting lower highs and lower lows. All right, downtrend. Yeah, you don't have to be Warren Buffett to see that is in a downtrend. You know, and a nice big bearish candle. All right, I would probably put a second target in here because there's clearly a level through here on the day chart. All right, so this would be TP1, this would be TP2. But how I trade, guys, is I need a retrace. All right, so we've got this big bearish candle. The problem we might have is it doesn't retrace and price just comes hurtling down. That is a possibility. But I want to retrace, all right, into here somewhere. And if we look at the H4 chart, I've plotted a couple of areas. So first of all, price could retrace, you know, just back to these last H4 highs here. Yeah, and then we get a bearish reaction. I need something to tell me to start selling. Yeah, so I need to see a bearish reaction, and that could be a H1 and or a H4 bearish candle combined with a M15 structure break or something like that. And if we get that, we can start selling. Price might want to retrace all the way up into this area. Yeah, and that's good because we get more value. But you can see before price has reacted many times here. We've got the moving average 20 coming round. This in here could be a really nice area. Again, bearish reaction. We start selling this pair. All right. So that's my first trade idea that I wanted to share with you guys, pound New Zealand dollar sell. And like I say, if you enjoy my analysis and how I look at the charts, then please come join my channel, Simply Forex. The next trade and final trade for today is Euro Pound. Again, let's start with the weekly chart. All right, and as you can see, yeah, we've got this weekly support level. Yeah, it's proven to be good support historically here, and that's all I'm looking for, a support and resistance level. You know, we've had price react there historically, and you can see right now, guys, price is reacting there as well. So we've got a good weekly support level. I wouldn't say these candles are crazy bullish. You know, they've bounced off of that level, but they're not crazy bullish. But we are getting nice bottom wicks, okay? But we're also getting some top wicks, all right? So we need to be aware of that. But what this is telling me is potentially there's a range here between here and here. There's a range, all right? But I'm still willing to take buys off this level. Why am I willing to take buys off this level? Well, if we look at the day chart, for me, this is now in an uptrend, literally by a couple of pips. So bear with me while I explain. Yeah, so we was clearly in a downtrend. Again, you don't need to be Warren Buffett to see this was in a downtrend, all right? But at this point here, yeah, this is the last high. Yeah, and also it stopped making lower lows. That is a massive red flag. If you're in an uptrend and it stops making higher highs, or you're in a downtrend and it stops making lower lows, that is telling us that buyers or sellers are slowing down, yeah, depending on the trend. And the price could be reversing even a structure break. And this is what we've had here. So when we got this big green candle here, yeah, the body of this candle, only by a few pips, broke the high, broke the last high. So technically for me, that is in an uptrend. We have higher highs. It also, you know, come above the moving average 20. I like to see price push above that. So for me, this is in an uptrend. And as I explained earlier, worst case scenario, it's in a range. Yeah, and it ranges from here to here. Yeah, we can see that already. Okay, so the idea is just to, you know, this is good weekly support. I consider this an uptrend stroke range. So it makes sense to buy this pair back up to these last highs. All right, so that's the idea. This is my first target, this 8565, the top of the range. But potentially if we get a break of that range, price could come up to here. All right. So that's what we're seeing. Now, like I say, I use the weekly and daily to give me my direction, and I'm happy to buy this pair. I'm now going to drop down to the H4, and what do I want to see here? So this has become a box of indecision in here, yeah? I've done a tutorial on this, guys, and I like boxes of indecision because once you get price contracting, basically, you've got buyers and sellers in here just fighting, and we haven't had a winner, right? But as soon as price contracts like this, and then we do see a winner, either buyers or sellers, then chances are it's going to move quite quickly. All right, because price needs to go somewhere. It's not going to stay contracted for the rest of its, you know, known existence. All right, so this is where we find ourselves. So what do I want to see for my buy idea? I want to see a candle pop through here. Yeah, I want to see a nice bullish candle break out of this box of indecision, breaking all of these highs in here. Yeah, perhaps a bit of a retrace, and then we can start buying back up to here. I put my stop below this box of indecision. All right, and this is TP1. You can, you know, I always take profit at the next support resistance level, but I don't take all the profit. So I will typically close 80% at this level and then let 20% run. But you could close 70%, 60%, yeah? But typically I close 80 and then I can always get back into the trade. Yeah, so let's say price did this, breaks this, retests here and comes off. I can add this 80% to this trade. Yeah, you can always get back into the trade. All right, so that's what I want to see. I want to see a break of this box of indecision, and then we can drive price back up to these last highs in here. So there you go, guys. Yeah, those are my two trades I wanted to share with you today. Hope you've enjoyed it. If you have, come join my channel, Simply Forex. Nice to meet you all. See you next time.
Okay, so I hope you guys have enjoyed the analysis there that Tom provided. He went over the Great British Pound to the New Zealand dollar, as well as the Euro, Great British Pound. So two amazing pairs, and the analysis that he did provide, I completely agree with, and it'll be interesting to see how price plays out over the course of the next week or so. Now, what I'm going to do is I'm going to go over some of the pairs that I'm looking at tackling this week, give you my rundown. I'm only going to choose maybe 2 or 3, just as I don't want this video to be too long, but I still want to provide you with that good quality content. If you do, however, want to see the other pairs that I am looking at tackling, so the ones that are on my watch list here, head over to the Learning Lounge group chat. I post all my analysis on there. It's absolutely free to join. The link will be in the description. Now, the first pair that I'm going to be going over in today's Sunday Sessions video is the Australian dollar to the US dollar. This is a market that is giving us signs of bullishness. It's respecting areas of demand on the higher time frames. So I'd like to see this continue and eventually break this weekly high that's been created on the extreme higher time frames. Now, when I say price is respecting these areas of demand, you can see that a demand zone was marked out here. We saw that price traded down and into this, and we've since seen what looks to be the start of a new bullish impulsive wave trading us higher. Now, as we zoom in and we look more at present data, so just going back to the year of 2020, you can see that I've marked out another order block. Price traded in, we've seen good rejection to the upside. Now, something I haven't actually marked out, but I'm going to now, is we've had a break of structure here, which is brilliant. So this suggests that the corrective wave trading goes down and into this order block here has now finished, and a new bullish leg trading goes higher is ready to take place. Now, as we go down to the daily, you know, going down and down and down on the time frames, you can see how price is still respecting these areas of demand. So we saw that price traded in after breaking structure to the upside to set that higher low before coming to trade us higher. Now, we have seen that price has traded into this area of supply and given us clear rejection. What I'm wanting to see now is for price to trade down and into this demand zone to pick up any remaining demand in order to see a continuation bullish. Now, as we zoom in and we look here more closely, you can see how it's given us the characteristics of a head and shoulders pattern. So I'm wanting to see price trade up and into this area of supply, give us a fractal break of structure to the downside. That would suggest that this initial corrective wave has finished, and the next impulsive wave within this higher time frame correction is ready to take place. I'd set my take profit just above the zone here, just to allow the trade to actually take profit. And then if price does continue to trade lower, absorbing this area of demand, then we could look to get reintroduced. I don't see price trading us any lower. However, price could come to liquidate this area, this previous order block, maybe to the 50% mark before trading us higher. This is just a way of the markets manipulating us retail traders and also clearing any orders that have been left over in the market. So in order for me to get involved in this market now, I do want to see price come to trade us up and into this area of interest, give us the parameters we need in order to execute our positions. So a fractal break of structure to the downside. So price may trade up like so. We then want to see price break structure like this. That would confirm the end of this correction. Price will then pull back to set its first lower high. This is where we get involved in those short positions and we trade price lower. Set my take profit here just to guarantee that our take profit is achievable. And then, as I say, if price does absorb that area of demand, then we may look to get reintroduced based on some kind of pullback. I am thinking that price is going to be bullish longer term. However, it's giving me signs of bearishness. So this could just mean that price is correcting itself within the higher time frame structure. Okay, moving over to the US dollar CAD. This is another market that's given us signs of bearishness. However, looking at this on the 3-month time frame, you can see how it almost looks to be ranging. The entire data we have looks to be ranging. I would love to see breaks in these highs or lows. I am more swayed to the bearish side just because we broke the last low that was created, that went on to create this highest high. So us breaking this tells me that there is dominance in supply, and we also are seeing price respect this area of supply here. So my thoughts are that price may distribute within this range before trading us lower in this market. Now I've marked out this area of supply up here, just as this is an unmitigated order block and price could come to trade up and into this. So this could be essentially an area that price goes short from. The area in price is here on the right hand side, so if you want to go ahead and mark that out on the 3 months time frames, then by all means do so. Now as we just go down on the time frames and we look more at what's actually going on, I've gone ahead and marked out the last protected low within the bullishness that traded price up. So this is the highest high that was created. So what I've done is I've marked out the low that created that high. In order for me to look to go short, realistically, we want to see a break in this low. If we want it to be preemptive with the positions we are placing on the basis that price is respecting these areas of supply, then we could look at getting involved based on a pullback into one of these areas of supply here. What we are seeing, if you have a look, is that we have broken fractally the last protected lows. So this would be the last protected low as this low created this high. So we have had a break in some protected lows within the bullishness that was trading us higher. I am swayed to say that price could be trading us lower to break this higher time frame low that was set before coming back up to set a higher time frame lower high before continuation lower. So we could look to place positions on this market, but it would be a little preemptive. I would much rather be safe than sorry and wait for the right confirmation. As we obviously go down to the 4 hour time frames, you can see here how price has traded into this order block that I've marked out, and we are now seeing price break down. We've set equal highs here. I'd love to see this low break like so, price then to pull back, trade into one of 2 order blocks, and then trade us lower in this market. If we are then getting involved in this market based on that confirmation, then at least we have confirmation that this corrective wave has finished and a new leg trading us lower is ready to take place. Again, if you're someone who's quite preemptive and you want to get involved sooner and don't require as much confluence, then you could just wait for price to trade into one of 2. As long as you are delivered with a fractal break of structure to the downside, that would confirm an end to the corrective wave that trades into these. But what it doesn't confirm is that this entire corrective wave here has finished. So just be careful and mindful when you're looking to place positions without the higher time frame confluence that you need. Just heading down to the 1 hour time frames, you can see that penetration of this higher time frame supply zone. We've had a fractal break of structure, so a corrective wave into one of these, followed by a fractal break of structure to the downside, would obviously allow us to get involved in shorts. I would ideally want to see this break here in order to get involved in a higher time frame swing that could see price trade below this point. But there's no harm in looking to get involved in shorts here. Just obviously, as I say, be mindful about where you're placing your stop loss and your take profit orders. I'd probably look to place my take profit here, and then my stop loss would be above the zone that I get involved from. Now, obviously, once we have that higher time frame break of structure to the downside, that does confirm the end of this. And then I would be more than happy to trade price lower, down and just above this last low. And we'd simply wait for price to pull back up, trade into a zone before trading us lower. Now this is obviously great as it allows us to get a more refined entry and an increased risk to reward ratio. So rather than having a 1-to-4, we're then allowing ourselves to get involved in a 1-to-11 trade, which gives us greater profits. But that's my analysis for the US dollar CAD. I've given you those 2 zones there. If you do want to look to get involved in short positions, just be mindful about where you're placing your take profit and your stop loss. And then once we're delivered with the higher time frame confluence and the higher time frame break of structure, that's obviously when we can then look to get involved in our bigger positions. Okay, cool. The final market I'm going to be going over for you guys today is the Euro NZD. You can see here we've had a penetration of a higher time frame supply zone. We were delivered with a break of structure to the downside, breaking that last protected low within the bullishness that traded us in. Gives us the confirmation that price is now looking to go in a downtrend or reverse to the downside. We've been delivered with that structure, creating lower highs and lower lows in this market. I'm now wanting to see a new lower low form. However, we can see that price, as we zoom in, is well on its way to doing that. We were delivered with breaker structure here, which was amazing. We've had bearish structure being put in this market ever since. However, as we go down to the 1 hours, we look more closely at this structure. So we have an impulsive wave, corrective wave, impulsive wave. I'm now wanting to see price put in a corrective wave to trade us into 1 or 2 supply zones before putting in that next impulsive wave that trades us lower. So in terms of looking for positions this week, if we wanted to look to go long, taking part of the correction, we could do that. I just want to see a break in the last protected high, which would be this one. So as soon as we have a break in that last protected high, that would tell me that price is actually, in fact, correcting itself to grab more supply in order to take part in the next leg lower. Once we have that break, I'll then be happy to look for areas of demand to get involved in some long positions to trade us up and into 1 or 2 supply zones before obviously trading us lower. But ultimately, our goal is to be short in this market and to be a bear, to take advantage of those bearish opportunities as the higher time frame bias suggests bearishness. Okay, as you can see fractally, looking at the 4 hours, and then obviously go into the daily and the weekly, we have that same bias. So I am definitely looking for those bearish opportunities. However, we could look to take part in the correction. Just be mindful that we are then trading against the higher time frame prevailing trend, and when we should be cautious with how we manage the position we're placing. But as soon as price trades into 1 or 2 and delivers us with that breaker structure to the downside, best believe I am getting involved in those short positions, because the profits that we could generate from these trades will be amazing. Now, if you haven't done already, I would recommend highlighting out these zones for yourself, as these are definitely going to be areas of interest where we could see price reverse from. And you can see here a trade that we placed on the 1st of February that played out very well. I was expecting this entire impulsive wave here to actually take place from this order block. However, price did come up to trading into this one before trading us lower. I actually missed the entry here. As you can see, it happened at 12:30 at night on Monday, the 5th of February. So I wasn't actually at the charts at that moment in time, so I actually missed out on the entry there. The only way that we could have taken part in this would have been to place a pending order. However, for me, I like to wait for additional confluence, and I like to wait for the right confirmation in order to actually execute positions. I place pending orders from time to time. However, I do like to see those breaks of structures before I actually go ahead and execute trades. So that was an opportunity missed. I mean, if we just look at this, placing a short position from here with our stop loss just above the zone, our take profit would be set at this swing high. You can see that we would have generated 13%, risking 1% of our equity from this trade here. So not to worry, we will just make sure that we get involved from 1 of 2 zones here. Now, that is going to summarize my segment of this Sunday sessions video. I hope you guys have enjoyed. If you have done, don't forget to leave this video a thumbs up. All the support you guys provide is very much appreciated. And if you have any questions or queries regarding the analysis I've gone through today, please leave them in the comments below. As I mentioned before, if you did enjoy Tom's analysis, go ahead and subscribe to Simply Forex. The work he does over there is unmatched. He shares the same values as ourselves at LAGFX when it comes to Forex trading and the education that he provides to his audience. Now, thank you all for watching, and we'll catch you all in the next one.